Again, thank you very much for coming today. So what I'm going to do today is basically to complete one last part of the previous presentation. Then I will give another model of Musharakah, basically where we stopped. After that, we start a new standard, which is the Islamic Shariah Standards, right? So if you recall, in our last class, we were talking about various clauses between which actually represent the two Sharia standards. Our main observation was that the Malaysian standard, or the BNM standard, was more comprehensive again, and it has provided ample details about actual practice of the Musharakah. And that Musharakah is basically Musharakah mutanaqisa, diminishing Musharakah. Whereas AAOIFI Shariah Standards focuses mainly on venture Musharakah, Sharikat al-Aqd, whereby two or more than two partners contribute capital in order for profit maximization or for profit-making purposes. The actual scenario is that in modern Islamic banking, it is the Musharakah mutanaqisa under Sharikat al-Milk that is operating. So we have concluded there is no partnership between Islamic banks and customers as partners in the real sense of the word. What do we have is we have a practice in Sharikat al-Milk whereby both Islamic bank and the customer own an asset, and the customer will basically start buying the shares of the Islamic bank gradually on a diminishing basis until his shares would increase and the Islamic bank's share would decrease. The main objective of this is basically to provide financing based on a Musharakah basis. Of course, one of the main reasons why Islamic banks opted for this new model, number one, is to encourage risk sharing between the Islamic bank and the customer. My question to you is, in a house which is owned by both the Islamic bank and the customer, where is the risk sharing feature in this financing model? As I said, bank customer own a house, the customer keeps buying the shares on a diminishing basis. So what is basically, if I may ask you a question, where is the profit and loss sharing in this particular product? Maybe sometimes I turn it into a classroom. I ask my students. But this is simply to... Please.
Maybe the credit risk that the customer cannot pay. Customer doesn't pay. That means it's a risk for the bank.
That applies also to Murabaha and others. It's the same.
Rental payments, they are treated as a profit. Rental payments
Yeah.
for the house.
So,
and then there was this profit will be recognized by two parties, and it will be divided according to the profit sharing ratio. But this part...
What part will be divided?
The profit, the rental payment, it's supposed to be divided because it's less as a profit, right? But it will actually go to diminish.
Why they have to share the profit of the rental?
Because we're talking about Musharakah. So
it's the customer who is paying the rent.
Yes.
So the whole rent goes to the bank.
But this is two different contracts. Because Musharakah is the first contract, because they are owning both houses.
Exactly.
And there is another ijara. And ijara is separated from the Musharakah. So any income comes from the Musharakah, which is rental, will be recognized as their profit.
To whom? To both? Why both? It is the customer who is paying.
Theoretically, it should be by both,
Theoretically, should be by both.
Yes, but practically it goes to diminish the share of the bank.
Okay, it's as simple as that. It's the customer who is renting the shares of the bank, right? So assuming is 1,000 ringgit, so each month the customer will pay 1,000 ringgit to the bank. That 1,000 ringgit goes to the bank. He is actually now is a liability on the customer to pay the bank. For the bank is an asset. What is the sharing here?
For bank, the risk that is sharing is the portion that they are co-owning with the customer, the milk portion.
Okay.
So if there is any problem with the asset, the home itself, then they have to bear both.
Okay. So we have two things here. We have the asset, which is the house. We have the price, and we have the price, or let's say the profits. What is actually being shared here?
The house.
I mean, let's talk about the feature of profit and loss sharing, PLS. If you have a question like this in the examination, identify the PLS feature in a house financing based on Musharakah Mutanaqisa. Analyze, try to see whether there is a real sharing of profit and a real sharing of loss in a house financing based on Musharakah Mutanaqisa. What should be your answer? Knowing that this examination is a core examination, if you feel...
It is BNM standards, right?
No, in general, what's your understanding of the profit and loss sharing in the diminishing Musharakah model? I will put it in a very simple way. What are the bank and the customer sharing as profit, and what are they sharing as loss?
I think PLS occurs when price of house increases or increases.
Okay, let's talk about the asset itself, which is the house. What are they sharing in terms of profit and loss?
Sharing the ownership.
Of course, the ownership. I'm talking about either profit or loss.
Depreciation of assets or
Yes.
Good.
But that is not in practice.
So if there's appreciation of the value of the house, both will benefit.
In theory.
If there is depreciation, both will lose. Okay. That is a feature. What else?
The maintenance cost of the house.
Yeah.
Not the periodical maintenance, right?
And in the actual fact, who is bearing the maintenance of the house?
The periodic maintenance will be borne by the
Yeah, is the customer. How about the takaful? The insurance part?
It should both.
It should be both, right? In actuality, who is bearing that? Ask me. Because I bought a house like that, and I know what I'm paying, what I'm not paying. I'm paying a huge amount for takaful.
You're paying for the whole portion.
I'm doing the whole maintenance, whether it is substantial or superficial. And I'm bearing the whole thing. So
So do we have a disconnect here between theory and practice? And what do you do you personally?
the issue is, this is why I wanted to think critically of this product. The issue is, it's supposed to be a full profit and loss sharing, even in the maintenance, even in the cost. Even when it really appreciates or depreciates, the value should somehow change. But of course, when you talk to bankers, they will tell you, listen, be reasonable. Assume the bank's value has gone up. Are you willing to pay the extra? Assuming now the increase is 10% of the estate, is the customer, who is mainly someone who is not rich. He has a salary of 3,000-4,000 ringgit, and from there they are deducting almost half of it. Suddenly the estate price has gone up. Is he willing to bear? So this is an issue. Because practically in a Musharakah venture, the shares, okay, this is an issue. The shares of the house must be sold at market value, not at nominal value, because this is like a house, which is now represented by the shares. Now, if I buy, let's say this month, I'm buying 1% of the share of the bank. If we call it a share, it must be at market value, right? But in reality, it is not. Why it is not? There's another aspect of it. If we take the market value, the customer may not be able to pay the market value if the value of the estate goes up substantially. Then he is at risk, even though that is the actual thing. It's similar than buying a share in the stock market. You have to bear the risk. When you buy it at 10 ringgit now, it may be 5 ringgit tomorrow. But that is an investment. But this one is not an investment, this is financing. In financing, the bank and the regulators try to protect the customer as much as possible. For that reason, Islamic banks came with a solution. They say, okay, we fix the share price. However, what varies should be the rental. It's not the share price, which is supposed to be floating, market value, not fixed value. But because the customer could be at the disadvantage, then they say, okay, let's base it on the rental value. Rental value is mainly stable, right? It doesn't vary much. So they came to that conclusion. That part, which is the let's say the monthly installment, part of it, in the actual fact, goes to buy the share. The other one goes for the rent. This is mainly fixed, which is not supposed to be fixed, but the regulators have decided so. The rent is variable, but variable not to the detriment of the customer. So when there is a substantial, there is no, in my experience, I have seen that variation. The first 2 years, no change in the rental rate. It was the same. Third year, it increased by 60 ringgit. Fourth year, it became 160. The rental has gone up. Since 2 years, it hasn't changed. It's the same. So I understand that they are subjecting customers to the rental rate, which may change. But it is more stable than the share market. So that is how it is. Now, to conclude this, because there are many things, we cannot cover all the things. This is called Musharakah Mutanaqisa, diminishing Musharakah on the asset, whereby the customer keeps buying the shares of the bank on decreasing basis. Now, we have another product which I just want to shed light on it. And you tell me whether it is an interesting, and it could be a substitute or an alternative to diminishing Musharakah on the asset. This product, I'm sure you have come across this product, is practiced by an Islamic bank in USA, which is called La Riba. Do you know that structure? Have you come across that? Anyone has? Yeah. So that structure is called also Musharakah Mutanaqisa. But interestingly, it's not on the asset, it's on the usufruct of the asset. They call it Musharakah Mutanaqisa on the usufruct. And it is based on a Sharia principle which is accepted by the Hanbalis and the Malikis. A principle called Bay'ul Aini ma'a istithna'i al-manfa'a, selling the asset with the exclusion of the usufruct. So you can sell an asset, don't be surprised. For those who hear this for the first time, this is how it is. I sell you this marker, but I exclude the usufruct of this marker, which means I'm selling this to you. Now you own this marker. You are the owner of this physical marker. But the usufruct, which is the writing, I exclude it from it. I exclude what this marker can do. That is the usufruct.
Is it true ownership?
Yes. I sell you a house, but I exclude the usufruct of the house. It's not yours. It's mine. Even though the house, which is the building, the walls, the ground, the ceiling, are yours, but the usufruct of the house, which is staying in this house, getting protection from the heat, from the sun, from the cold, doesn't belong to you. I take it. I retain it. I withhold it. Yes. That's why I'm saying you may be surprised to hear this. This is called Bay'ul Aini ma'a istithna'i al-manfa'a.
Selling usufruct is ijara, right?
Yes.
Ijara to bay' al-manfa'a. So what about a bay?
So this one,
which is a bay and also an ijara. So bay'atan if you bay'atan.
no, I'm coming to that part. Now, understand the first part. This is well substantiated in a hadith which is narrated by Imam Muslim. Hadith Jabir radiallahu anhu. They were in a journey. Before they entered Medina, that camel, Jabir was on a camel, but that camel actually was very tired, I don't know. So the Prophet came and he hit it a little bit. That camel refreshed and became so energetic and dynamic. It's a miracle. The Prophet offered to buy this camel from Jabir radiallahu anhu. Jabir agreed, but he said, "Oh Prophet, I'm selling you this camel, but I will deliver it to you, I will give it to you when we reach Medina." Okay? So he says, "I'm selling you this camel, but I want to stay on this camel. I want this camel to take me to Medina. When we reach Medina, I will give it to you." Which means he sold the asset, which is the camel, and he excluded, for a temporary basis, he excluded the manfa'a, which is the usufruct of it. By right, both should be transferred to the Prophet, the camel and the usufruct. So the Prophet owns the camel at the time. He owned the camel, but he didn't own the usage during that period. I don't know how long it took. It could be half a day, 1 day, I don't know. But during that period, the Prophet had no right to use it. The usage still belongs to, actually, to the seller.
But in this case, there is no price for the benefit. Only for asset, there is a price only for camel.
Yes.
There is no price for using the camel, traveling with camel.
There's no price for the using.
Yeah, but the profit,
Talking about pricing, here is a good point. Yes?
Yeah. So the Sahabi didn't sell the usufruct from the place to Medina on profit. So he didn't receive any money for that.
Exactly.
That was a kind of benevolent action.
Exactly. That's why you have rightly said, La Riba Bank chose this product or chose this concept because he's offering the houses at lower price. Which means because they are not because the customer is not using the benefit, so they are charging less. But the second leg, before you ask any further question, I want to continue the second leg of the story. That benefit is leased to the same customer. Okay? Is leased to him. So, it is like this. Bank La Riba enters into Musharakah Sharikat al-Milk, not Sharikat al-Aqd, which means they own the house together. It works like this. So this is the house, which is owned by both the bank and the customer. So this is Sharika already. Now the bank will sell, the bank owns, let's say, 80%, and the customer owns 20%. All right. Now, the bank will sell the whole 80% to the customer. Okay? But he excludes the usufruct. Now, the customer owns the house, 80% of the house, but he doesn't own the usufruct. The bank will actually lease this usufruct to the same customer. The proceeds of the lease is basically the profit, the principal and the profit which the bank wants to make. So in a tenure, let's say 5 years, and they do that for car financing and home financing, assuming it's a car financing, vehicle financing, 5 years or 3 years. So within that period, whatever has been collected from the rentals would represent the principal plus the profit of the bank. So as the customer makes the monthly installment, here he is actually making installment for the usufruct, not for the asset. The asset he already owns. That's why it's a diminishing musharakah on the usufruct, not on the asset. It's opposite of the musharakah mutanaqisa practice in other Islamic banks. That product is only applied in La Riba Bank, and they said they chose this because number one is to offer lower prices, because they will base the price on the rental, which is more stable than the actual prices. Number two, they base it on the price of the house, or the rental rate of the house, depending on the locality. For example, Petaling Jaya, where we are now, the rental is, let's say, 1,500. If you go to KL, it could be 1,800. If you go near KLCC, it could be 2,000. So they will charge the rental of your area. This is what is written in their document. So to them, number three, they avoid this double taxation. Because here, they are not paying taxes on the rental. I don't know why. They only pay on the sale. So they are not being charged for rental, and that would reduce the price of the house, the cost of the house. Yes?
If the customer chooses not to live in the house, let's say he bought the house on a lower price.
Yeah.
But he's not using the usufruct. He's living somewhere else. Somebody else is using the house. So that rental will be paid by someone else? Or
No.
still?
His name is in the contract. He's the one responsible.
So he must live there.
Not necessarily. You can buy a house and live in your village, but you still have to pay the rent. Not necessarily you should stay where you bought the house. This one you can. Because in rental, in ijara, sublease is permissible. But some are very strict. They say you should get the permission of the original owner or the main owner. Some say no need.
Well, in this case, the customer is already 100% owner.
Yes, but he's the owner of the walls and the ceiling.
in this case, there are two transactions. First, transferring ownership. Second,
Ijara, exactly. Yeah.
But is it possible for two transactions in one contract?
Yes. This is also, we have a Sharia standard called Al-Jam'u Bayn al-Uqud, combination of contracts. And there are parameters of how to combine contracts. The most important one is that this combination should not lead to riba, usually. And should not be a means, a purposeful mean. You do it purposely to charge riba. Okay? Such as sale and loan. Sale and loan, bay'un wa salaf. When you sell something, in the same time, you give a loan. This is a trick, a hila, actually, to charge riba. For example, you give a free interest loan to someone. But in the same time, you force him to buy an asset from you, and you charge him the percentage of the riba which you want to charge, but you don't tell him this. So you want to charge him 5% on the loan, but you lie to him and say, no, I'm charging you 0 for the loan. But whatever I want to take from the loan, I'm charging it to the asset I'm selling to you. So I take it from there, which is prohibited, cannot be done. Yeah.
At the end of the day, if I would be the customer, I would say, how much do I pay you for the house in total? Like, what is the TCO, the total cost of the house?
Yeah.
You're saying the bank, La Riba, is able to sell the object, like the house, for a cheaper price. But
actually, it's the market price, by the way. It at cost, whatever it costs.
Whatever it costs.
Yeah, if it is 100, it's 100.
Okay.
Yeah.
So, but it doesn't end for me, right? So I'm paying the 100,000, for instance. I get the 80%, so I'm the owner. But I'm still obliged to pay, let's say, 5 years or 10 years. There has to be a temporary clause in it.
And you can pay early if you want.
And I pay the rent.
Yes.
And I have to pay the rent.
Yes.
So that means at the end of the day, it's not really cheaper. Because the total cost, until I really get the full ownership with no other being involved, I paid the whatever cheap price plus the rent price, right? So it doesn't necessarily mean it's cheaper for me as a customer.
But you can change the rental rate.
It doesn't. What do you mean? What does that mean?
You can charge $1 rate.
Oh, who decides the rental price here? The customer or the bank?
The bank, based on the market value of that house in that locality.
I think the whole purpose of it is just to avoid taxation.
Yeah. I mean, this concept exists in Germany. This is nothing new. Nothing. Just Arabic words. Add it, make it Sharia.
What do you have in Germany? Sorry.
This concept exists.
You
can
mean
buy a house and you don't get the user right. You get temporarily.
Okay.
You can have that. For example,
maybe you are not referring to financial lease, whereby I sell you the house. Sorry, you want to buy a house, but before I can transfer this ownership, I lease it to you. Let's say for 5 years. With the last installment you pay to me, I would have already recovered my capital and profit. Then I enter into a sale whereby I sell it to you on a very nominal price.
Well, I can give you.
This is financial lease.
You go to Germany. There's a house you want to buy it. A friend of mine, he just did it a couple of weeks ago. I spoke to him on this. So he bought a house. The house was owned by an old woman.
Okay.
Okay. And he had to commit that she will live until she dies. So he can buy, get the full ownership. He cannot even enter nothing.
Sorry. He buys the house. He cannot use.
No, he has to wait until she has a user right. That's very common in Germany. These cases happen.
He buys a house, but he cannot occupy it until. You have that. حق الانتفاع. But حق الانتفاع is temporary. It does not transfer ownership at the end. So this is something completely different now. حق الانتفاع, you can use my house for 50 years. After 50 years, it must come. But we still call it a sale contract, even though it comes back to me. In the Gulf, they call it عقد المصاطحة. It could be 99 years, but they still call it a sale contract. But this one, I buy a house, but I have no right to stay in it until you die. After you die, it comes to me, right?
Well, like it already came to you.
Uh-huh.
You're fully owner.
But you have no right to stay in it.
You say it again?
You said you have no right to stay until the other person dies.
Yes. There is no user for you.
This is similar to the hadith of our Prophet ﷺ.
Yeah. So that is...
I'm saying it's nothing new.
Yeah.
The message is, I mean, the concept here, it seems like it's really to avoid taxes and nothing more.
Okay, because I don't have statistics to show whether it is affordable, cheaper or expensive. But this is according to their own evaluation of the American market. I don't know, but this is how they say. But theoretically, when you charge the rental rate, it's more stable than the estate rate, the house itself. But it could be for purely legal reasons. But it has one positive aspect, that since a long time we are calling, the Islamic finance industry is calling for actual prices. We are against using labor or Kleiber as a benchmark, right? Even though all scholars agree to it, but with reluctance at the end of the day. And what they have suggested instead is to use the rental index rather than the price index of goods. So rental index is more, why? Because it represents a real asset. Al-ijara, the usufruct, is a real asset. So when you take the rental rate, it represents an actual asset. The advantage which I can see in this model is that the price represents the actual price, because it refers, whether it's practiced in Germany or Israel, it doesn't matter to me. What matters to me is that you have an asset, you are pricing it based on that asset, not based on labor or Kleiber. From that aspect is good. Other aspects, it may not be suitable to other markets. So this alone has to be studied, this particular product. Yeah, please.
I just want to ask if this Musharakah is not truly a Musharakah profit and loss sharing.
Yeah.
Why not just make it a Musharakah contract? Just the bank sells to the customer and that's it. What's the purpose of having a name of Musharakah with no underlying principle of Musharakah?
You mean, so you are saying no difference between...
No, because as we just discussed, the true profit and loss sharing is not applied.
Yeah.
And they still call it Musharakah. And then this makes a Sharia issue. But if we make it Murabaha, the bank buys and sells to buys from the contractor and sells it to the customer.
In fact,
I mean, I don't know if I am right or not. The Sharia issues are far less.
What I would say is that when scholars talk about profit and loss sharing, they mainly meant the profit and loss sharing in a venture, in Sharikat al-Aqd. The objective is to make profit. If we make it, we share it. If we don't make it, we share the loss. This is the main objective. But in Sharikat al-Milk, there is also profit and loss sharing when only when this asset goes up in price or goes down. In a typical, for example, you inherit a house. You inherit the house from your father who just passed away. The brothers and the sisters own this house. Suddenly the price of the house goes. This is the profit they are making. Suddenly it goes down, they are losing. From that aspect, we have that. This is the only aspect I can see. But the other one, no, we have to do business and see whether we can make profit or loss. So from that perspective, it's okay to structure a product based on Musharakah Mutanaqisa. It does that, I have to be very frank with you, it operates like a debt instrument. Because whether the house goes up or down, it doesn't matter about why, because they have already fixed the share price of the house. The rental, I don't know, have you ever heard the rental rate has gone down? It could be, but what is the norm of the market? It's always going up, right? I mean, just see any house, you find that it is increasing. My case is a good case. I have been paying this for the last 5 years. It's always going up. I was waiting for it to go down to see the Musharakah aspect. There isn't. So I came to a conclusion that, well, so practically it operates like a debt instrument. The customer is the one who has to pay the bank. The bank is not bearing. The only problem, the only thing which, between brackets, we can see that there is some kind of satisfaction is when the house is destroyed. When the house is destroyed, let's say a force majeure, an earthquake, whatever it is, who will bear the risk? It's not only the customer. Both have to pay according to the proportion of ownership. The bank has no right to ask the customer to pay the full... Yes. So but the bank has secured its position by asking the customer to pay takaful. So if anything happens to the house, the bank is being covered by takaful. But this takaful is paid by the customer, it's by me. So the bank doesn't lose anything at the end of the day. The way I see it, it doesn't lose anything.
Also, Prof, we cannot say for this product as a Musharakah Mutanaqisa, because Musharakah is only until transferring ownership. After that process, there is no Musharakah basis in this transaction. Only
you mean in this Lariba?
Yes, for this case, Musharakah Mutanaqisa only is until the transferring ownership. After transferring ownership, the renting process is starting. So, until only that process, we can say Musharakah Mutanaqisa. After that?
Here, it is different from the normal Musharakah. Here, the Musharakah is not on the asset, because the asset is entirely transferred to the customer. The 80% has all been transferred. What is being shared is the manfa'a now, is the usufruct. As if now 80% of usufruct is going to be rented, because this one is already owning 20%, right, of usufruct. It's only the 80% that's going to be leased by the customer. So this product differentiates between ownership of asset and ownership of usufruct.
The 80% going from bank to customer, which contract is that?
Ijarat al-manfa, the lease of the usufruct.
But it's not the lease. He buys it. He buys the 80%, right?
Huh? No.
He buys it. Well, the 80%.
In this product, the customer is actually renting the usufruct, not the asset. The usufruct.
But
the asset, the customer himself.
You see?
He bought it 100%.
Well,
he bought.
It is 80-20, right?
Yes.
And then he buys the remaining 80% from the bank.
The asset.
The asset.
Exactly. Now, by buying the 80%, now he is 100% owner of the asset.
Which contract is that?
This is a sale contract.
Okay, I just wanted to hear. Okay.
Yeah, he's buying.
We move on.
Yeah. Now the second part, the ijara comes in, the lease. The lease of what? Of the usufruct of the house. But the customer owns 20% of that usufruct. but he doesn't own the 80%. So the bank starts leasing this to him on 5 years basis, for example, until he owns the whole usufruct. So it's a diminishing process on the usufruct, not on the asset. Asset he has already bought already. Yeah.
So, Prof, the bank sells the asset gradually and then sells the usufruct gradually?
No. The bank sells the house from the beginning.
Okay.
This is your 80%. Mabruk. Congratulations. Second part, start the rental process. But only on the 80%.
And these two contracts combined.
So combining these two, yeah. So there are 3 contracts here: Musharakah, to own the house together; Ijara, okay? And there is a wa'ad actually. A wa'ad means the customer has to give a promise that...
I still missed the part. Where is the contract? Where is the contract where the customer then buys the 80%?
At the beginning. At the beginning.
The actual asset, where is that part? Then there has to be 4 contracts. Because you're saying there is a
They mentioned in the model. They mentioned in the model that the bank sells his. In step 2, the bank sells his share in the property ownership to his partner, while retaining his ownership share of his usufruct until the time its partner pays remaining portion of the price.
Yeah.
So it's like there will be no additional sale at the end. Just like the hadith Prof mentioned.
I'm not talking about the end, I'm talking about the beginning.
So at the beginning, it's very simple.
At the beginning, there is a status. The status is a musharakah between 80 and 20.
Yeah.
This is a contract. This is a musharakah.
Exactly, yeah.
Now, the second step is there is a sale.
Exactly.
80% of the asset goes to the customer.
Yes.
Where is this? Is that the second contract?
Yes.
Okay.
So the process would be musharakah, sale, ijara. That's it.
And then what?
The wa'ad is at the beginning will be given by the customer to buy, to rent the shares of the bank.
It's spending.
Huh?
It's spending, right?
Yes, it is. So if you want to know the sequence, musharakah, sale, rent. But in between there is a wa'ad, because the bank has to see a commitment from the customer that he's going to, just like in the normal musharakah practice everywhere, the customer has to give a wa'ad that he's going to buy the shares of the bank. Yes.
But Prophet, the hadith of our
Prophet,
at the end, Prophet says that I don't want to take that camel anymore. So is our Prophet refusing the transaction or?
Oh no, that's a hiba. That's a hiba. Scholars say that ultimately the Prophet didn't. I didn't finish the story. Sorry, I should have finished the story. When they reached Medina, and Jabir radiallahu anhu came with the camel to the Prophet didn't want to take it. Scholars understood that as a hiba, as a gift that the Prophet has given to Jabir. Because now it's his. The camel belongs to the Prophet. But he offered it again as a gift. It's his right.
But Prof, in this hadith, is there any price for usufruct?
No.
No. So why in this case there is a
price
for usufruct?
Very good question. We have Sharia justification on excluding the usufruct. This Sharia justification is hadith of Jabir. What is the Sharia justification for the usufruct to be leased to the same customer, to the same person? Right? This is based on ijara, that it is okay to enter into ijara. Now, this usufruct, is it a valuable asset to be leased? Scholars say yes. Therefore, there is no harm entering into a new ijara contract to be combined with the sale contract and the musharakah contract, just like we have the actual murabaha to the purchase order. We have 3 contracts together. The musharakah in the bank, we have 3 contracts. As long as it is structured in such a way that it doesn't lead to riba or a legal device to circumvent the prohibition of riba. So the combination of contract is made here. but is according to the principles of combining contracts.
But for this product, scholars, I think, should not base it on that hadith, because hadith is not related to this product totally.
It is, half of it. The issue is, can you sell an asset and exclude its usufruct? The answer is yes. What is the evidence? It is this hadith.
They are wrong. If they say like this one, wrong.
Why wrong?
Because we are taking some part of hadith.
Oh no.
Leaving other part.
I know what you want to say.
This is called istinbat in fiqh.
Yeah. What you want to say that I understood you. I understood you that the hadith should answer all the issues and refer to all the issues. My answer to you is not necessary. An evidence from Quran and Sunnah can answer part of your issue. The other part can be from another evidence. So it's not necessary one hadith can, for example, murabaha to the purchase order, you will not find a hadith or a verse detailing the process, 1, 2, 3, 4. But you will find one hadith on murabaha only. On installment, the payment by installment, you will find another hadith. On the wa'ad, you will find another hadith. But so when you bring those ahadiths, they all serve the same purpose.
Is there any hadith for the price of used craft? Is there any hadith? The main point...
This is part of the ijara, by the way. Since it is ijara, which is lease, or you can bring all the evidences of ijara.
In the ijara, ownership belongs to bank or other part, not the using part. In the ijara contract, use craft for tenant, but ownership of the product belongs to other part.
Yeah, this is in a normal ijara. Now we are talking about an asset which is called the usufruct. Just now someone asked me about sublease. Do you know what is sublease? Yeah, sublease. Let's say you have a house. I rent your house, 1,000 ringgit for 1 year. I'm staying in that house for 1 year. I lease it from you, okay? Now you own the house, right? But you don't own, at that 2 years, you don't own the usufruct. It's not yours. It's mine. Now, since it is mine, can I lease it to someone else? Which is called the sublease. Can I? Can you Google a little bit? Google? Why?
Because it will be under... Let me check first.
Yes, check first.
When the bank sells the 80% to a customer, is that amount separate and the rental amount separate, or is the same rental amount? It's just two separate amounts.
Yeah. Once the bank sells to the customer is one, it's separate contract. These two, by the way, should be completely separate.
Well, that's what we counted, right?
Yes.
The selling is the sale contract.
Should be.
The usufruct is the lease contract.
Completely separate. Yeah. So to answer this, sublease is permissible. You will find this. AAOIFI has allowed it. Some scholars like Sheikh Taghi Osmani is a bit reluctant, but he said if the original owner allows it, there is no issue. But as long as that usufruct is recognized in Sharia as an asset, that means it can be sold. So you can sublease it. Why? Because you own it. Now, in this example, since the customer since the customer owns, so he owns now he doesn't own the usufruct. Therefore, it belongs to the bank. Therefore, the bank can lease it to him again.
I was wondering if
the
ownership is complete tam, the milk is tam without the milkul manfa'a. I mean, what they are saying in their model is they are differentiating the milkul raqaba and milkul manfa'a at the very beginning of the contract. So they are transferring milkul raqaba but not transferring milkul manfa'a.
Exactly.
In that case, the customer, the buyer does not have the complete tasarruf. or the possession. He cannot sell the property to someone else, right?
Yeah.
So is the ownership complete? If the ownership is not complete, how can we call it a buyer or an abt?
Here, this is like a restricted sale. This is similar to what we have been talking about. You sell something, but you have no right to use it fully.
Kind of buy wafa or something like that.
Bay'ul wafa?
And bay'ul wafa was an example of restricted sale.
Yes. This is this is a kind of restriction. Yeah, we can use it, but it is a sale. At the beginning, it looks weird when we say, I sell you something, but I exclude the manfa.
You cannot use it, you cannot sell it.
It looks weird, but this hadith would give us the evidence that it is permissible. Because the moment you hear this, you may say, how come I buy something, but I don't own its use of right? Well, this hadith is a good example that you can sell something, but you cannot use it if both of you agree on this. But of course, there are some conditions, because we have two great mazhab who prohibit this, by the way. We have Shafi'is and Hanafis who say this kind of sale is not Sharia compliant. Why? Because, as they say, this is this condition that I sell you but I exclude the use of right, تخالف مقتضى العقد, is against the legal effect of a sale contract. When you sell me something, I should own the use of right. How can you exclude it? So the two great mazhab are against it. It's only the Malikis and the Hanbalis who allowed it. And there are plenty of texts in the Islamic jurisprudence books that substantiate that. So it's a disagreement. What you are saying is completely in line with the Shafi and Hanafi. It's not okay.
So BNM does not support this?
No, they haven't discussed this. I mean, they know about it. Dr. Yahya is always our guest. He comes here, the CEO of the bank. But I don't know why they are not buying this product. I mean, the idea.
This ownership of money supposed to be only for assets or can be commodity as well?
Any asset has a raqaba, which is the asset itself, the physical, and the manfaat. So assets both are.
Assets, not commodities.
I mean, these are terminologies in the market. You can call sugar as an asset. You can call it a commodity. It's okay.
What I'm asking is that you can, for example, you can use this argument to maybe think about derivatives.
Yeah.
CPO, for example. So you can sell the right to use the CPO. This is almost like an option.
This is in derivatives.
No, I'm just thinking to get it.
It's
not, if it's allowed for commodities,
yeah,
then you can do that.
No, for derivatives is another story. Yeah. Because they are not recognized as assets.
So let's not talk about derivatives.
Yeah.
Can I sell the right to use CPO, for example, and I am still the owner of the CPO?
So this is now you're talking about option. Selling the right. Yeah. This right, if we are, the underlying asset should be Sharia compliant. For example, if you own a liquor shop, I'm just giving an example. So you can sell me the right, but the underlying asset of that right is not compliant, is not Sharia compliant. So one of the main conditions, this is part of the so-called the sale of rights, bay'ul huquq. So the most important condition that the underlying asset of that right should be Sharia compliant. That's why when Malaysians try to justify sale of debt, they were not successful. When they say we are not selling debts, we are selling the right to receive the receivables. So this idea was not well received. You are selling the debt, but they say, for example, a bank sells debt to a debt financing house like Chagamas, for instance. Previously, not now, previously, they say we are not selling this mortgage to Chagamas. We are basically selling the rights to receive our dues, our payments from the customer. Instead of receiving them from the customer, we are receiving them now from Chagamas. So it's like, but ultimately it was sale of debt.
Which is still okay from Sharia perspective.
It is okay if the price is a commodity, is an asset.
And if the debt is established, the right is
yes.
certain.
There are 3 or 4 conditions according to Malikis and Shafi'is. The most important condition for that is that the debt must be established. The original creditor must be alive and accessible. Because if he passes away or he doesn't want or he defaults, the new owner of the debt will suffer. That's why the Hanafi says this is entirely based on uncertainty, gharar. Why they don't allow? Because of gharar. But the most important condition in sale of debt is what? That the counter value must not be ribawi. If you have a debt in the form of monetary value, the counter value when you are selling, what you are getting should not be money, should not be a ribawi item. It should be an asset in exchange for money, not money for money.
Well, unless it's money with another currency. If it's another currency?
That should be what?
Say it again?
Even for another currency. It's the same. Because you are not doing sarf here, you are not doing currency exchange, you are buying.
Exchange is halal.
Yeah. This is when you are making sarf, which is called currency exchange. No, I'm selling you $100. I'm selling you $100, and I'm getting 444 ringgit. That has to be on spot basis. But here, I'm selling you a receivable, which is in the form of mortgages. The underlying would be what? Money. This debt is basically money, right? I'm not here exchanging, but rather I'm buying. So because if we apply the rule of sarf, then this bay or debt will be halal, will be okay. Because this is selling debt for debt. When I'm selling you my receivables and I'm getting money, and that money is not transferred on the same debt, so it is also delayed. So this is selling debt for debt, which is not permissible by the majority of scholars.
But if I want to buy your receivables, 10,000 ringgit, I cannot give you 10,000 ringgit cash.
Yeah.
True?
Yeah. Neither.
Because it's ringgit to ringgit.
Even though with another currency, because that is money.
So what do you give instead?
Huh?
What do you give instead?
The only permissible thing, which is permissible by Majma' Fiqhi of Mecca and later was adopted by Majma' Fiqhi of Jeddah and also by Zaytuna, is that the counter value should be an asset. Bay'u ad-dayni bis-sila. It's called Bay'u ad-dayni bis-sila. Selling debt, not with the receivable, with that, but with commodity. For example, here in Malaysia, Chagamas has adopted this concept recently. They are buying mortgages for Islamic banks, but they are paying them in CPO. And the Islamic banks, because they don't need the CPO, they are sending it again to Bursa to get cash.
So it's paperwork.
At
the end of the day, it's a paperwork
transaction
to come to the solution.
When you say paperwork,
it's all electronically, obviously.
It doesn't mean. No, it doesn't mean this transaction is not real. It simply means they're using this platform of Bursa with the full conditions of a transaction, like the right of delivery, the existence of the asset, the CPO exists, and if the bank wants to take delivery of the CPO, it can take delivery. What makes a transaction superficial, is that when you as a customer, you cannot take delivery, and the other cannot take money. When I buy something from you, I should receive the asset and you should receive the payment. Do we have this in Bursa? Yes, we do. The customer has the right to take, and the customer and the seller has the right to take money. That's why there is a flow of, there is a cash flow. You can see it. Now, recently we were visited by Mizan Bank in Pakistan. They wanted to really make sure whether this is a true Bursa or a fake one. How did they discover that there is a real cash flow going on? When they ask, how are we going to pay you from Pakistan? How do we pay you? When we buy the CPU, okay, from the supplier here in Malaysia, via your Bursa, how do we pay? Now the Bursa official says, you have to abide by the international payment system. There are some regulations. So when they examined their condition, they found that they have to do it. I mean, they have to make payment that way. So these people say, which means you are really selling the CPU? They say, yes, we are. Because if you don't pay us that way, you will not get your CPU. You got my point. The point is that once there is a payment mechanism, which means there is a true sale. It's not like we sell you the CPU and you are in Pakistan enjoying and the tawarruq is made in the air. No. When we sell you there, so the official here say, when we sell you, you have to tell us how you are going to pay us. That indicates that there is a true sale going on. That's why many people who don't know how Bursa works, they think it's a game. It's a game going on. It's not a game. This is a true sale going on. And if the cash flow doesn't exist, we don't accept this. There should be cash flow going on, which means the price of the asset should go to the books of the buyer, of the seller. When I sell, it should appear in the books as asset, and it should go out of the books of the buyer. Do we have that? We have that. How do we make sure that A has sold to B? So see at the balance sheet. So when they came and they checked, they found that this is a real one. But there are improvements to be made. I have to be frank with you. There are improvements to be made, and recently they are making a good improvement on the so-called final leg of the transaction. My intention today is to go to istisna. Yeah, so we take a break. But I have to tell you something. By 5 I have to stop because I have another important appointment to go to. So exactly sharp at 5 I need to go. But the istisna I will just try to finish it in half an hour, inshallah. So take let's say 10-minute break, then we come back. Okay? So that's all what we have for today, and we will see you next week, inshallah.